Hello, this is Will Allen with Centera Capital. In today's market update, we are going to be taking a look at the latest stock market action. Then we're also going to look at recent economic data. And finally, we are going to check in with small business owners to see how they are feeling about the U.S. economy. Let's dive into it. Now, before I get into the market update, as you can see, we are in our new studio. You know, we started filming these videos on a regular basis last summer, and we had been using our lobby to do the filming, which was not ideal as you have people coming and going. So thus, we now are in our new studio. It's a much better situation. All right, one last thing. Don't forget to like and subscribe to the channel or share with your friends or family that may not be getting these kind of market updates. All right, speaking of market, let's dive in and talk a little bit about the stock market and its recent action. You know, going back about a month or so, we talked about the fact that the stock market had basically 5 months where it had gone without any decline of over 2.5%. That is very unusual to have such a nice run with so little volatility. We knew at some point that would come to an end, but the question was when. In the last 3 weeks, we have finally seen that market pullback. The S&P 500 has declined by about 6% from its high. Not unusual at all. If you think back to last year, which was a fantastic year for the market and for our client portfolios, the stock market had 2 declines of almost 10%. One was in the spring and the other was in the fall, the August-September decline that we talked a lot about last year. But nonetheless, the market's had a 6% decline from its recent high. And the main trigger for this decline was something that we talked about in our last video that we said was a red flag, and that was a tick up in the inflation data. And speaking of that, let's transition and talk a little bit about some of the recent economic data releases. Now, we originally recorded a video to send to you 2 days ago, but because of a blockbuster release yesterday morning, which is Thursday morning, we said we got to re-record this to let the people know what we're thinking on this topic. So the release yesterday morning was the first quarter GDP report, which was expected to come in around the 2.5% growth range, but it came in at 1.6%. The markets dropped significantly on that news. In fact, the Dow Jones Industrial Average was down over 700 points early in the morning. The S&P 500 down almost 2%. However, when you look deeper into the numbers, what we found out is that a big reason that the number came in at 1.6 was because of trade and inventory numbers. What we look for in the GDP reports, which measures, again, economic growth in the United States, is how is the consumer doing and how are businesses doing. And when you take a look at those two figures, the numbers yesterday was 3.1% growth, which is really, really strong. Now, I'm going to put up an illustration here of the GDP numbers going back now 7 quarters. And you can see that all 7 of these numbers were over 2%, including a number of 3.4% on December 31st. So again, when you strip out and look at how is the consumer doing and how is business investment doing, 3.1%, that was a good number. And in fact, the markets came around to that as well. Because by the end of the day, the Dow Jones was down around 300 points, 350 points, and the S&P was down about 0.5%. So we were glad to see that, but this was key that we wanted you to know how we feel about that data. Now, one last thing, this is Friday, and this morning was the release of another inflation report, the PCE report. So remember we said that there was an uptick in inflation, and that was a red flag 3 weeks ago. We were talking about the CPI. We're going to put up now a chart that shows inflation numbers from 3 different measures. And what you will notice here, all 3 of these have had an uptick here. What you currently have is the CPI is at 3.48%. The PCE is 2.71%, and the producer price index is just over 2%. That measures wholesale inflation, what's happening with businesses. So again, these upticks are slight so far, but we are watching these closely because if they continue to rise, that's going to make it very difficult for the Fed to do any rate cuts later this year. Okay, for our third topic, we are going to take a look at something that we haven't talked about in quite some time, which is small business optimism. There is an index that the National Federation for Independent Businesses, the NFIB, has been surveying over 10,000 small businesses, and this index goes back over 40 years. So we wanted to look at this because the most recent report, and we'll put this up, the most recent report came in at 88.5. This was the lowest number going back to 2012. And you can see that this has had a precipitous fall over the last, 4 or 5 years. And why this matters is small businesses make up over 50% of the jobs in the United States. They're very, very important. Now, we need to look a little deeper to find out why are small businesses a little more pessimistic now than they have been. And there's a good figure for this. Let's put it up. And this looks at, and there's a lot happening here, so stay with me. This looks at the single most important problem for small business owners. Inflation, quality of labor, taxes, and cost of labor are 4 of the items here. You will see inflation is in blue. This was a non-factor for businesses up to 2021. Then it saw a surge. It had been declining over the last year and a half, but notice there is an uptick here from 20% to 25% of small business owners saying inflation is their biggest problem. So again, we want to watch this closely in the months to come. We don't want inflation to become a bigger and bigger problem here, and in the inflation data, we don't want to see it becoming an issue there. Now, lastly, I want to mention that first quarter earnings season is in full swing, and I will be talking about that here in 2 weeks. But it's important because we get to hear from companies across all the industries to hear how they've done in the first quarter, but also their guidance, how they feel about the outlook for their businesses. One of the things I want to highlight is that we have heard already from American Express and Visa. MasterCard is coming soon. We listen to them carefully because they are at the forefront of consumer spending. We know that individuals in the U.S. love to use their credit cards, and if you have been on an airplane or to a restaurant or a ballpark recently, you know there is a lot happening and a lot of people are using their cards for spending. Both Visa and American Express said for their outlook that they have seen not even a hint of weakening on the consumer front. That is very good to hear. Because listen, in the long run, even though the markets can have pullbacks like what we have seen in the last 3 weeks, ultimately, if companies are doing well, if they are having strong revenue gains and profit gains, market pullbacks are just going to be run-of-the-mill temporary, like we saw in 2023 with 2 near 10% declines in the S&P, but the markets bounced back because businesses were doing very well. We will continue to watch that carefully here from our new studio. Thanks again for watching and take care. Hey, thank you so much for watching our video. If this is the first time that you've seen one of our videos, you can head to centeracapital.com and go to the contact page if you want to have a conversation with us. We have a 3-meeting process that we have with potential clients to make sure it is a good fit for both sides. And if you are not getting this kind of market updates from your advisor, we would love to hear from you. Take care.